Hello, this is John Yates, and I chair the technology practice at the law firm of Morris, Manning & Martin. And I'm pleased today to be with two fine gentlemen from BIP Capital, Mark Buffington and Mark Flickinger. Mark and Mark, it's good to see you today.
Good to see you, John.
Good to see you. Thanks for having us.
Well, listen, BIP Capital has been one of the leading investors for tech companies, particularly fast-growing tech companies in the Southeast. And as I've told Mark and Mark, when we are asked by folks anywhere in the country who is one of the leading, if not the leading investor in the tech community and most successful tech investor, BIP Capital comes to the top of the list. So let me ask Mark Buffington, as the co-founder and the CEO of BIP Capital, to tell us, how was BIP Capital formed, Mark, and sort of what was your vision at the time you created the organization?
Thanks, John. And good to see you, Nick. So, you guys know a little bit of this story, but I'm from Atlanta, played baseball at Georgia Tech. That did not work out as a career. Then made my way out west, but my academic background was in econometrics. It's a fancy word for statistics and economic and decision making. And so I was in a hedge fund out there, made a little money before I thought I would, and started just kind of dabbling, investing in startup technology companies. I didn't even think of myself as a venture capitalist then. I was just trying to get into a good deal. And so a couple of those really panned out in a big way, not to be boastful at all, but I just kind of, at that time, I guess I was probably in my early 30s then, kind of looked at everything and said, gosh, this is what a wonderful way to make a living. I want to do this for the rest of my life, and really tired of staring at a computer screen all day running a hedge fund. And so I started making that transition as I researched, how to really build something that could consistently fund founders. I really approached this from the side or from the mentality of an investor. And what I found with securities laws, as you guys know, is that this is not a democratic process to fund startups. And in my mind, one of the great tragedies of our securities regulation is that so many competent people are blocked out of investing in startup technologies because they don't have the required net worth. But it doesn't matter how smart they are. It doesn't matter what experience they have. And there's attempts to change some of this, but I thought that was wrong, frankly. And so when I started building this, I wanted to create a platform that allowed the mass affluent to access the asset class of venture capital. And so had no idea what I was getting into at the time. And then we just found a massive vein of pent-up interest that couldn't find access to the asset class. And all of a sudden, money that nobody else had really tapped before started flying our way. And so that gave us the ability to fund a lot of things. And then to your point, it's fun. A lot of this is luck, and I say this all the time, but of the first 7 deals we did, 6 were really successful. And so that gets you started. And, and then actually we went through, it's covered up, but there was a period of time where I think maybe got a little arrogant and just thought we could make anything work. And so there's this period of time, really in a certain vintage for us where we did not do that well, but that performance is masked by a couple really good deals, but I know we were not doing good work then. And then so we went back to the drawing board. That's really when we brought Mr. Flickinger here in and really thought through how we were going to approach this. You know this because you work with us a lot. We're very process driven, very data driven, and I really think it's put us on a course for just a tremendous ride here. We've had a tremendous 2 years, even during the pandemic. Again, not to be boastful, I know a lot of people are suffering, but we have really just sailed right through this. And so, that's the basic origin, and that's, kind of how we're thinking about the world today.
That's great. And by the way, I'm pleased to be here with Nick Forrest, who's my colleague in our corporate technology practice. And Nick's had the pleasure of working with you and a number of your companies as well. And I think, Nick, you would agree with a lot of these comments. But one of the things that I think Nick and I have been impressed with, and maybe Mark Flickinger can talk about this, is the fact that BIP Capital has also covered a lot of different vertical markets. In other words, it's not like you've just been in one area, but you've done a great job of picking winners in a number of different areas. Is that an intentional focus on your part? And what are the key factors you're looking for when you select a company?
Yeah, Flick, I'll take that, but please add color. Yeah, so John, our focus has been to methodically grow into various verticals. So what we're looking to do is build the various investment practices at BIP Capital around somebody, around a person with deep domain expertise and large leverageable networks. And so, for example, we brought in Dan Dreschel, who you guys know well, who is an enterprise SaaS guru. I think he's a 5-time CEO in enterprise SaaS deals, but he also has a lot of, we didn't have a good name for this, but we're calling it frontier tech now. And it's the application of advanced computing. So computer visioning, artificial intelligence, artificial reality, augmented reality, all of that to real world problems. And so a simple example of that is Pointivo, which is kind of a computer visioning software that enables drones to see in ways that humans can't and solve problems that that require some kind of elevation or something like that a drone gives people the capability to do. So those are the types of things that Dan's working on. But the basic idea is we build vertical practices around domain expertise and large networks that people have. And so for me, that was healthcare and a little bit of fintech. And for Paul Eiffeldano, that's media tech, sports tech, based on his experience at weather.com and travel.com. And so that's the basic idea. So that's how we've been able to be in so many verticals. And that's the strategy going forward. We'll continue to look for super talented people that allow us to expand into interesting opportunities or interesting verticals where we think there's really interesting opportunity.
You brought some real talent on for sure. You've also put together this ebook on the state of startups in the Southeast, and it's very comprehensive. It covers the southeastern states that tend to be some of the most active in bringing in new companies. What can you tell us about the genesis of that? And it must take a long time to put that together, but give us some ideas about that report. And maybe, Nick, I know you've got a series of questions that you wanted to ask about that as well.
Yeah, sure. I'll take that. So, this is the 4th year that we've done the report. And, the genesis of it was we were doing a lot of sort of thinking, as Mark mentioned, we're data-driven internally around sort of, well, what's going on in the ecosystem and how can everyone sort of benefit from it. And we've been fortunate to be beneficiaries of a lot of help from others. And so the thought was, well, if we can educate the ecosystem and sort of en masse, right, at large and through a report through the lens that we're using, then the kind of rising tide floats all boats. So that first report we did back in 2017 was really, let's talk about the ecosystem in general, and then let's go through each state individually. Since then, what we've done is we've sort of taken a different turn on the front end of that report, right? So one year we talked about maturation of the space. We've talked about valuations relative to these other ecosystems in the country. And then this year, obviously, it's sort of hard to do the 2020 report of the state of the Southeast without covering the pandemic. And so you mentioned sort of the time we locked the data as of June 30th. So, kind of if you go back there, we're sort of in the throes of it in terms of what was going to happen, and then sort of sifted through the data to see what trends were sort of accelerated and what trends had stopped relative to what we'd done in the previous couple of years.
Yeah, that's good. So, one of the things, obviously that was the focus of the report this year, and it was very interesting to dig in there. What have you seen in terms of technology trends that have been influenced by the pandemic? I know you guys talk about macro trends a good bit in that report. What were some of the things that stood out to you?
You want me to take that, Mark? You want to do it?
Yeah, I'll go first. I'm sure Mark has some color to add to it. I mean, one of the technology trends is what we're using right now, right? I think this sort of ability for people to telecommute, telemedicine, all these technologies that existed but were slower for adoption because people were used to doing something in sort of this workflow. And change is difficult. You're comfortable doing something in a certain way, and so being forced to change. But I think this kind of rapid cataclysmic event sort of forced everybody to reevaluate all aspects of how they do business. And so, work from home obviously has been a buzz phrase for most of 2020. And then all these technology solutions that come around that allow that to be possible, and for us to all be sort of efficient and able to work. Telemedicine is one that's sort of been sucked in, but it's not the only industry that's sort of adopted. Now that they've sort of had to look up and see what else is out there, I think all these other technology solutions that have been around but have relatively slow to be adopted have sort of accelerated 3, 5, maybe even 10 years.
And maybe just to add to that, I think Our mindset is, and one of the guys I greatly admire is John Doerr at KP, and he has a great saying, it's no conflict, no interest. And so we're kind of gluttons for punishment. And so we try to take on really big issues, a lot in healthcare, for example. And I mean, there's no doubt that we have a massive cost problem in healthcare, which in my mind leads to an access problem. We have fellow citizens that don't have access to viable healthcare. But the problem is it's so expensive in the U.S. the way we deliver healthcare that you have to make these really tough choices about, well, did they get it, and what if these people can pay for it, and so there are odd trade-offs and so we've really zeroed in on the cost problem in healthcare. If we move to a single payer system or some form of universal healthcare bicameral system in the United States, we can't do it unless we solve the cost problem in healthcare. And so while the debate goes on about access, which is a viable debate, it seems like people are ignoring the cost challenge problem. And you don't ever hear a politician stand up and talk about the real problem. And so we kind of feel like if we're tethered to solutions that are really solving that will be a part of providing universal healthcare and access to all at some point, I think that'll happen at some point in the next 10 to 20 years. But again, it can't happen responsibly if we don't solve the cost problem. So we've tried to be tethered to all those things. And as Mark mentioned, I mean, we look up, and so we were in remote patient monitoring, telemedicine, essentially optimal patient navigation. So which is, really reduces cost if you through the continuum of care, route patients to the right places and right solutions. And so all of those things, in a weird way, the pandemic accelerated. Again, not to be boastful, certainly we didn't have a crystal ball and predict the pandemic, but we woke up and said, by focusing on the right problems and doing things the way they should be done, some things happen that put us in a great position in a number of businesses. So those are the trends that I see happening. Is in a weird way, I think the pandemic accelerated the right solutions, value-based care, lowering the cost of care, things like that. And we're fortunate to have had that, like, just be on the right side of healthcare change, or be on the right side of weird things. I'll tell you one more. So like Play on Sports, we stream over 400,000 live sports events, and with limited fans in the stands now, we've seen just a tremendous surge in that business. And grandparents, uncles, aunts, parents can see their kids play now across the country, and over 50% of the high schools in the country. So it's just, so things like that. And all of a sudden you wake up and you're like, okay, we were on the right side of that. And then all of a sudden this pandemic accelerated everything we were thinking about. And so it's been a really interesting and validating year in the oddest of ways. And it's hard to enjoy that when you see so many other people suffering. So all that said, I mean, I think those are the trends we're seeing. Is, I think, to put it in just one sentence, the pandemic has accelerated, in my mind, most of the right solutions. And it just, for every time our nation deals with a crisis, we generally gravitate faster towards the right solution. Not always, but mostly.
Good. One of the things your report highlights as well is just, overall funding dollars, deals being done. This year has been unpredictable, to say the least. And, speaking here on Election Day, it's probably going to be unpredictable yet again. But quick question for you. I mean, a lot of the funds that we, spoken with and work with, they had a bit of a pause on investments for the moment, maybe in June, when some of the data was locked. On your report, if you guys could just take a minute to talk about how your investment strategy has sort of played out through the year, I think that would be a helpful tidbit as well.
Yeah, sure. I think everyone, sort of hit with this event, and everyone was sort of forced to freeze and reevaluate the situation. I mean, the ground was shifting underneath all of us at the same time we were trying to walk on it. And so, for us, the instant impact, the first impact, and I remember vividly the call I got from Mark, like about 5 to 6 days ahead of when everything else shut down, saying, we have to be on this, we have to be with our portfolio companies, was, let's evaluate what we've invested in today and make sure that and I think everyone went through that. Sort of, you have these high flyers that are spending money for growth, and it was working, and that's not going to work as you kind of roll through Q2. We spent a lot of time immediately with our portfolio company figuring out how to get to the other side, not knowing where the other side was. And that was a combination of reductions in costs, slowing spend, reevaluating your existing portfolio or your existing customer base and how you could keep them, et cetera. But I think as we kind of rolled through this time, sort of the end of Q2, and you can see it in the report, suddenly, funding started back in June. And the PwC Money Tree report, which looks at venture in aggregate, came out for Q3, and it was the second highest dollar spent quarter ever in the history of venture capital. And so I think once you sort of go through the portfolio, fund what needs to be funded, et cetera, then it was sort of like, okay, well, how do we run our business, which is typically in person? How do we run this business from our homes? And I think that's a combination of connection with your portfolio, but also the pipeline, right? In order for deals to get done, you need to meet people. We're comfortable meeting people in person and asking questions and getting to know them. And as an industry, both entrepreneur and investor had to figure out, like, well, how do we get to know each other and due diligence in a way that we can't actually break bread and have a meal or shake hands. And I think you could see that kind of happen over the course of June, July, where everyone got comfortable with meeting deals kind of electronically and virtually, and then figured out sort of, okay, what do I need to look for? How can I diligence in a different way? How can we get comfortable with each other? And then as that happened, more and more deal flow continued to happen. So, I mean, I think in aggregate for 2020, we've been able to sort of, in aggregate, continue to move forward, investing in sort of follow-on deals within our portfolio, as well as adding new companies to a portfolio. But it doesn't look smooth, right? There's sort of this little break in Q2 where we had to reevaluate the way business was getting done. And I think as things move on and I'll say relax, or we figure out what happens with the pandemic, whether that is, the vaccine or however else things move forward, a lot of the new stuff, as Mark mentioned earlier, I think is here to stay. I mean, there's ways to efficiently do business that, you didn't evaluate before because we'd always done them in a certain way. And I think there's some ways that we can do better diligence and better, connectivity with the potential investment before we make an investment, without going 100% sort of swinging the pendulum back to where it was before the pandemic hit.
Yeah, that's good. I know we saw a very similar pattern in both on the company side and the venture capital side and PE side as well in deal flow. So not surprised to hear your answer on that one. One of the things your report highlights as well is it's awesome the way it breaks down each state. Speaking specifically about Georgia for a minute, you guys are highlighted as the most frequent venture investor in Georgia. So, other than being headquartered here, what is it that you guys like about Georgia? What makes Georgia different, both maybe nationally and then within the Southeast, and maybe even Atlanta in particular?
Yeah, so I think the way Crunchbase ranks that as most active investor in Georgia, and so it's based on number of deals. I don't think it's based on dollars invested, sure, even though I think that we've got to be close to that as well. But, I think for the longest time, and when I first met John years ago, Atlanta and Georgia, but really more Atlanta in particular, looked fairly immature to me as a venture market. I mean, I'd come from the Bay Area, 10 years there, begged entrepreneurs and founders to get a meeting at Starbucks, and like you get 50, like they're interviewing you. I mean, it's quite different when you come here and like people were begging to take a meeting with you. So I think that was an adjustment, but the Atlanta market has really, really matured. I mean, there's, I'm going to guess at this, Mark, but I think we're kind of tracking 14 or 15 other venture firms that are either headquartered here or very active in the market. And the angel market has really become robust. We like to think we're a part of that. I mean, we really think about our families that invest through us as, a very large angel syndicate. There's 1,200 of those investors or those families that are actively investing in angel stuff. So I think the market, we've seen other wealth management groups, so that's another part of our business, but we've seen them kind of run a similar play, which has been just great for the overall ecosystem. So if you ask me, Atlanta's really matured, and this will probably surprise you guys, even though we're still doing a lot of deals in Atlanta and in Georgia. In our current fund, Fund 4, 50% or more of those investments will be made outside of the state. So we've been really active in the Midwest, particularly in Indianapolis, Columbus, Ohio, Minneapolis. And it's precisely because we see those markets in a very similar way that we saw Atlanta maybe a decade or 15 years ago. There's tremendous technology talent, founder talent, operating talent, and just not a lot of capital there. And so that's a nice advantage place to be for investors. And so we've got some big winners in places like Indianapolis and Minneapolis right now in our current fund. So we'll still be super active in Atlanta, but that said, we're spreading our wings as well.
That's good to hear. That was actually my next question on your list is what other markets outside of the Southeast you were focusing on? And that's a great answer. And it's something, we're implementing as well on our side. Frankly, we've seen a lot of the secondary markets be really fruitful for us too. There's a lot of technology companies everywhere and venturing outside of the bigger cities or even the coast. There's a lot of companies that need good representation. So we're playing in the same ponds as well.
Ask a final question here for Mark. And one of the things that BIP Capital has done in such an impressive way is to create process. And Mark, you alluded to this, process systems, not just sort of gut feel, but actually building out models in that regard. And it's our impression that that's been a differentiator for you, not just internally, but also how you've been able to use those kinds of processes and systems and apply them to your portfolio companies. Can you talk a little bit about that, maybe as a differentiator for you, and then how you bring the right resources and talent together? Because I know that's also been something you highlighted, people that can actually put those processes in place and help a company grow and scale in a more systematic way.
Yeah, I think just as a very high level, the ingredients of success for a venture fund, if you ask me, are the people, the process, and then the strategy you go after. Is it sound? And so, we are very data driven and very process driven. And I think the reason that is that, as we always say this internally, and what's important to me in hiring people is people who are absolutely committed to this as a craft. And right. And you know this, you guys watch enough for this. This space will teach you some very quick lessons if you make mistakes and in a painful way if you're not paying attention. And so, we've taken all those lessons of almost 2 decades of doing this and really culminated it into things that help us. I'll give you one of the hardest things that I think that there is to do in a venture fund, and that is you see so many deals if you're doing a good job sourcing. And so to put that into perspective, we see about 1,000 deals incoming a year. And so to screen through all that noise and whittle it into something that makes sense is hard. But then you whittle that down to somewhere between 60 and 100 deals that are worth a really strong look. But but we may make 4 to 10 bets in a year, maybe 12 now, just given our growing size. But the point being is it is really hard to differentiate between that roughly 10 and the other 50 to 80 as like, what is the difference between good and exceptional? And so a lot of that process and technology helps us make those decisions and really try to zero in on the exceptional, not just the exceptional opportunity, but the exceptional team and company that's prepared to go capture that opportunity. And that's to me, that's what's really started to separate us and really started to drive the exceptional returns is just a real commitment to that through data, but ultimately committed to our craft and constantly getting better.
That's good. Well, Mark, thank you for joining us today. We really appreciate the time and appreciate everything you guys do for the ecosystem, both in Atlanta, the Southeast, and really beyond. So we value our relationship with you and really enjoyed reading that startup report as well.
Yeah, well, thanks. You guys are great. And thanks for all the support in the community.
Yeah, thanks, guys. Likewise.
Thank you.